Everyone believes we're about to experience 30x, 50x, 100x on these altcoins, but what everyone is waiting for is that pullback. Are we going to see a pullback now that the CPI data has come in for the US and they've experienced a solid 1.2% pullback? Doesn't sound like much to us in crypto, but for the traditional markets, it is quite significant. So where are we at today? What is going on with Bitcoin as it hit $50,000 yesterday and had a slight pullback in the last 24 hours? Let's dive into that in today's video. It's your home of macro cycle analysis, studying the past to forecast the future on stocks, crypto, Bitcoin, and of course the real estate cycle. Now this everything bubble isn't going anywhere, just like asking for a like and subscribe. We are on track to hitting 400,000 in 2024 so more people can see the cycle for what it is. Links in the video description for our free crypto and economic report that went out yesterday. Check your inboxes and get yourself an account with Bybit or BitGet. We have a free workshop coming up for you guys who have used the links down below. Now let's kick it off with the biggest narrative we are seeing in Bitcoin right now. And that of course is the ETF volumes, the ETF inflows. Basically, ETFs buying up all of the Bitcoin more than what the miners are able to produce every 10 minutes. We're seeing cumulative spot Bitcoin ETF volumes continue to rise. Spot Bitcoin ETF volumes, they're continuing to outpace the sell-off here. As you can see here for the flows, you've got the light blue being the outflow, the selling of Bitcoin, and the rest of the colors here basically being bought up. And obviously in the last day, or at least on the Friday bar there, the 9th, there was extreme move to the upside. So extreme buying happened on that day compared to what was selling. Now, as I said, this is probably the biggest narrative that I'm seeing across all of the socials right now for Bitcoin, I'd say leading into the halving. And what can lead people astray is believing in one narrative, believing in this fundamental that is different to last time. Remember those words there. Of course, this is different. Things have to be different when it comes to the narrative, but what happens around these particular events is typically the same thing. We believe something is going to change the way the world operates, and we're experiencing something for the first time ever in life. But remember, this happens with every single cycle, every single generation throughout the entirety of history. There is always something that we're told to believe in that seems to be different from the last time. And yes, the actual event is different, but how we respond to those events typically isn't. So with my rant on ETFs, the main thing I want you to take home from this is as we lead into the peaks of the cycle with the market continuing to run up higher and higher and higher, don't let it fool you that this time is different and that we could go into a super cycle that would never see lower prices again. I suspect that's what will happen, just like what happened in the previous cycles. We're led to believe that there was going to be super cycles of Bitcoin, that you'd never see those same lower prices. Well, guess what happened in the last cycle? You had the peaks, and then the price actually did something that it had never done before and retrace to the previous old all-time high. That had never happened before on Bitcoin, and it happened in the last cycle after we all thought that the price would never come back to previous levels because of an extreme event. We had super cycles, we had futures markets here, and now we have the spot ETFs that are bringing in a lot of volume. In the short term, maybe we see higher prices. Maybe we try and clip that 52K. But the really important thing here, as I've mentioned, is to not get carried away with each of these narratives and just focus on what the charts are doing. Now, another narrative that we have seen before, which was in 2023, was the banking system going to collapse. This is a beautiful representation on a chart of what happened on the chart, the profits that were made, and how people missed out on those profits. Banking system is going to collapse. There is March 2023. And so it did at those first few days. There was a few banks that went down. And then over the course of the next 6, 7, 8 months, the market basically went sideways and put in a higher low. Meanwhile, everyone was telling us, see, the market is going to collapse. After that point, we know from October, the markets have skyrocketed. NASDAQ, S&P, Dow Jones, many other markets around the world have skyrocketed from this point, which is leading to that everything bubble, which is why you're seeing a lot more increase in value through Bitcoin and cryptocurrencies, which we'll get to in a moment. And essentially, you're starting to see a lot more of the bears turn bullish, and that is a scary point in time. When most people think the markets have no reason to go down, that's typically when they go down. And so that's why I focused a lot on Bitcoin at the start of the video, looking at the ETF stuff. People are focused on reasons why Bitcoin can't go down, but just think about what happened. Here's a perfect chart. Think about what happened 12 months ago. Everyone was focused on reasons why Bitcoin could only go down as opposed to why it could go up. And if you guys were here on the channel, you remember exactly what we were saying, looking at this being the bottom, looking at March in particular being the higher low, when everyone was screaming for the markets to collapse in March 2023. That was our huge, massive, biggest buying opportunity that I can remember since that low there. But this was essentially the confirmation telling us that the markets were ready to go up. Now, if you haven't followed from those periods and you're just joining now, hitting the subscribe button, essentially there is still time left in the cycle, as we pointed out, when it comes to the everything bubble, which should lead us over the next couple of years. That brings up more questions around, could this cycle top out earlier, and could we get a left translated cycle? Essentially, could Bitcoin top too early and then spend many years coming down? While that's always a possibility, I don't think it's a case for this cycle. And we'll talk about that in future videos, but I think that will happen in future cycles, potentially after this cycle here, where we might get another quick pump, and then we'll spend multi-years in a bear market compared to what Bitcoin's recently seen, or in its entire history. It's never spent multi-years in a bear market, basically a year up to about 14 months. So on that banking system collapse narrative, this, I suspect, will come up again throughout this cycle. I just wanted to mention that again as a reminder, because we continue to see the same things time and time again. And of course, if the banking system has some troubles as we continue to move forward, which I suspect most of us see that it is happening, then we start to realize what the Fed's going to do, potentially print money to help save the majority of the system, but let some of the banks go down as they have done in the past. Eventually, it won't work anymore, and most think that's going to happen sooner rather than later, as they thought in 2022, as they thought in 2023, and probably they'll think again in 2024. So, onto another incredible piece of data here with only 3 data points. The main thing I want to bring up here is looking at big long stretches in gains for the S&P 500, 72-day stretches with only 2% pullbacks. Typically what we see is a shorter term, 2-month loss for the S&P after these signals. It's not a long-term continued downtrend. 1928, different story, but the longer term seems like we've still got some more upside to go. We're just watching out for a correction on the S&P 500 and the NASDAQ in the short term, as I've talked about sometime in Q1. So maybe this is the time. We have to see how it responds to 4,884, which is our short-term 50% level, and potentially if it gets back under the previous old all-time high, which was in that 4,800 point area. So if the traditional markets do have a pullback, I suspect that might put a little pressure on Bitcoin and cryptos to also have a pullback. We're not there yet. We're at 2.57% of a decline from the peak, which was which is the current all-time high, and the previous move to the downside was 2.88. So we're a little way off that, getting very close to matching the same decline that we've seen in this uptrend. So if we start to overbalance that, which is something that you can learn more about at the Investor Accelerator, TIA Premium down there, this is a simple tool that we use to balance the understanding of the market, whether we're about to see a rollover or it's just a healthy measured correction. Essentially, right now, it's getting very close to being balanced to what it currently was on the move to the upside, the price to the downside, and in terms of time. We're looking out for, I think it's about 5 or 6 days to the downside. More on that throughout the videos as well, so we can keep a measured look at these corrections that are occurring on the markets. Now, of course, many are going to point to the CPI announcements that came out recently. CPI was down year on year, but it was higher than the forecast. Forecast was 2.9%. It came out at 3.1. Last month's reading was 3.4. So on a chart, it is still going down, just not as much or not as fast as what the forecast was. And so this has happened before. It's a bit of a shock short term, and then the market sort of figures out, well, it's still going down. It's no big deal. And you essentially see the markets recover over the longer term, and the drop typically isn't as severe. So what could this drop look like? Well, we touched on this yesterday as well, just looking at the seasonal correction in the markets around this midpoint in February into March. Sometimes it lasts through into April, but just looking at the yellow box right here, you can see that's the start of February, that's the start of March, and this little point here is the start of April. And typically, you'll see a bit of a drop off from around now in February into March. This is getting quite specific here. It's the 4th year of a new president, not just the 4th presidential year, but the 4th year of a new president. And of course, Biden took over from Trump, who makes him a new president. And essentially, this is probably the roughest period to ride out in the markets, which pretty much doesn't seem like it right now. But as we can see from the seasonality here, using all of these data points of the years, basically from that point forward, you'll still get corrections in the market, as you can see throughout the year. But the overall trend when you zoom out is essentially up for basically the entire year. Well, here he is again, Becker at the peaks of markets. I mean, we haven't seen an exact peak yet, but like you know, we have talked about the old Becker call at previous peaks in the market before, and he is probably saying last chance for grisly entries before Bitcoin new all-time high. I mean, this comes up every single time Bitcoin or altcoins in particular get to one of the peaks in the market. And we've covered this plenty of times on the channel before. Nothing against old Becker here. He definitely knows how to please a crowd and serve you exactly what you want to hear, feel, and see in your jellies. So pay attention to your jellies, see how they're feeling at this point, because he doesn't come around all that often, and he basically shows up when the jellies are at their most extreme feelings. Speaking of feelings, the fear and greed index has dropped off since yesterday's extreme greed. Obviously, we had a nice little correction here on the S&P and on the NASDAQ. Now, I had these speed channels on the way up here, basically from the lows to the highs. And for the S&P 500, it hasn't come back to that just yet, but the NASDAQ has. It's come back and tested these a few times. So I'd say if this drops underneath this basically the speed of the move out of the banking crisis to that July peak, well, then you can tell that the market is slowing down. And the NASDAQ might be the first signal there. But basically back to the fear and greed, this has dropped off since we saw it yesterday at some extreme greed levels at a new all-time high. What are we seeing now? Lower highs on the reading here. So turning from the short term to the long term, remember we can have short-term corrections in the overall longer term trend. Japan, it is at a 34-year high. This was the peak in 1989. It is 2.5% away from a new all-time high. It has not done this in 34 years. So what I'm trying to explain here is that we've got the everything bubble blowing up in our faces. With any sort of corrections that we may see in the short term, it's probably unlikely that it is going to stop the charge for now. Eventually it will, and yes, okay, it looks like a double top. Possibly we'll get some sort of correction. That's what I'm trying to say. Shorter term, maybe we'll see some sort of correction. I know we've been talking about that for quite some time. But when you get to these high extreming jelly feelings, no time for fluff, I've got to get this out to you before it's all too late to get your grisly entries, you know, that sort of feeling of fear and how it's written into posts and how you feel about it, maybe you do get a short-term correction just to calm down that greed, like we saw in the fear and greed index for the S&P 500. So don't get too disillusioned. The big bubble is still here, but potentially seeing some of the shorter term stuff begin to roll over. For the US dollar, it is also climbing, which is potentially putting a little bit more pressure on the commodities and of course the stocks as well. This has been up for the last couple of months, but do note the volume has been dropping off. Every time this market's moved up, volume has dropped off. Last month, volume dropped off again compared to the previous months. And right now we are on track to do something similar to the January volume, which would also be lower than the previous moves to the upside. Doesn't mean it can't keep going up. It just means the volume is low at this point, which typically means you might see a correction, which is exactly what happened November and December. Low volume up, and then that correction came into play to come back and test around that 100-point level for the USD. So a big look at the macroeconomics, looking at all of the markets around the world, as that's what we do here at the Investor Accelerator and on the YouTube channel. If you guys want to learn more about trading and investing, check out the link in the video description for TIA Premium. And of course, get yourselves accounts here with Bybit and BitGet for when our free trading workshop is released. Those using the links will get access to that. You can join our members and traders as well who are hitting some very significant gains, and it's real in here. You will see some losses as well. You got big gains here and some losses as well. But remember, this is about portions of your portfolio. It's not your entire portfolio. That's the big stuff that you get to learn. Moving on to the Fear and Greed Index for Bitcoin and cryptos. Well, it's had a drop off as well. Obviously, Bitcoin's come back a little bit from 79, which was the highest reading that we have seen in a year, and potentially all the way back to November 2021, which was the old all-time high, or the current all-time high, I guess. We've now had a little bit of a correction from that point. Could this be the rollover? Well, Bitcoin still has not given any indication that it is ready to roll over just yet. The move down has bounced back. Second highest close for 2023. The swing chart is still up, and there hasn't been any signal yet to suggest that we are going to fall, or at least Bitcoin is going to fall. As we covered in yesterday's video, there's still the overhead resistance at 50,500 and above that at 52,100, which takes you back to December 2021, those weekly swing tops before the market came down. So a lot of people are watching these particular numbers, 50,000 and a half, 52,000 as well. I'd say if we break through this level relatively soon, probably in the next few days because of how long we've been up, then we obviously have a chance to hit 52. Breaking that, well, then you've got clean ground up to about those areas at the high 50s to low $60,000. The flip side to that, we should always be prepared for both sides. So if this is the top for Bitcoin, well, then we can look to the 50% level. $44,500 should be a relatively simple place for the market to find some sort of support. Now, onto the S&P and the signal that we've been following for the next phase of the Bitcoin market heading into new all-time highs. The S&P 500 on each of the occasions has basically gone into a new all-time high while Bitcoin has remained underneath its old all-time high. That's what these yellow boxes are about: Bitcoin accumulation, Bitcoin bear, Bitcoin bull. This is the time frame of what Bitcoin has done. Basically, break out of all-time high, then puts in the new all-time high for Bitcoin, puts in its final all-time high, and then the bear market. So in these accumulation phases of Bitcoin, prices underneath the old all-time high, you can see that the S&P 500 has punched to new fresh highs, then corrected. And this cycle, it's punched to new fresh highs, and we're waiting on that correction. Cycle before last, new fresh highs, pretty good correction here in 2015. Not huge by a percentage, looking at tops to bottoms, 15%, but it was big for the time because that was the biggest correction that it had seen since 2011. Almost 5 years, basically 4.5 years in that it's seeing any sort of double-digit correction is pretty significant to the market. And so each of these times, S&P pushes to new fresh highs. Typically, there's some sort of reaction. In 2019 wasn't huge, but it was still a reaction there on a monthly chart here, on a big chart, so about 7.5%. And then from that point, Bitcoin continues its climb before heading into its all-time high once the S&P pushes to a new fresh high again. Now, in yesterday's video, I asked you guys to put in your strong altcoin picks. So besides the spam comments here, you guys had heaps and heaps of altcoin picks down below. So a few of them stood out, and I said I would pop them up on the channel today if there was enough, and we definitely got that. So let me know in the comment section again what your altcoins are, and I'll hopefully get to that in the next video. I'm going to look at them against the Bitcoin chart. There was a few of them that popped up. Injective was one of them. Against its US dollar pair, Injective looks fine. It's there at $34. It's hit a high of 45, and it's holding out relatively well, even though volume is dropping off at the moment. But when you look at it against its Bitcoin value, it has put in lower highs and now lower lows against Bitcoin. So it doesn't mean that it's going to completely fail and it's all over. But remember, earlier this year, I've been talking, or even December of last year, been talking about some of these altcoins where they are having their big moves now, and potentially in the big altcoin season, later in 2024, 2025, maybe they don't move as hard. This happened to Link in the last cycle. It moved into August 2020, but we should remember that the peak was November 2021. So it was about 14 months or so that it was going down against its Bitcoin value. So it was losing pace against Bitcoin, and you were better off holding Bitcoin for that entire period rather than Link. Link, however, is another one that was on the list, and it's a different story at the moment. Looks like it's putting in some lows and then putting in higher lows, breaking higher. Doesn't mean we're about to shoot up, and it looks like it's trying to find a base right now, but I would be definitely keeping my eye on this one, especially if it does not come back and break down from this low at roughly, I believe this is about 30,000 Satoshis. So keep an eye on that for Link. Now, there was one more in there that popped up a lot, and it was SUI BTC. This has been on a nice charge, especially while the market had a decline there after the ETF and then continued up. But a lot of other altcoins had been heading down. Whereas in this case, SUI it's continued up, but the movement up has been rounding. So typically a couple of things happen from this point. You either get a nice basing out pattern at the higher levels. So that's a good thing, time to accumulate. You don't get the cheaper prices, but at least you can see the strength in the market holding up. The other thing is, it just continues on until it's ready to make a correction. But if this is the top and then it starts to break down from that point, typically taking out previous swing bottoms, then you'd have to say that this is much weaker and it needs more time to accumulate before it can start its pump again. Overall, SUI looks like it's setting up for a pretty good, massive altcoin season. Things can change. Don't get too swept up in it, especially don't marry your altcoins, and be sure to take profits. More on that in future videos. We are on that journey to 400,000 by the end of the year. So share it with a friend. Let me know in the comment section where you're sharing it, and I'll see you guys at the next video. As always, take care and peace out.